sadywelljapan.com. Today's lecture is save your tax by purchasing the used asset. Can you save your tax by purchasing the used asset? Yes, you can, and I'm gonna tell you how you can do it. Before I actually explain the detail, I want to briefly explain you about Japanese depreciation system. It's kind of important to understand how you save the tax. So fixed asset will be depreciated and become expense. And there are two depreciation methods. One is a straight line method, the other is fixed percentage method. Straight line method is applied to the building or equipment attached to the building, so it's basically about the building. So fixed percentage rate method is applied to the rest of all, like machinery or furniture, cars and office equipment. If you do not select fixed percentage method, will be automatically applied to the machinery or furniture. But if you file the application to the tax office, you can apply the fixed percentage method to this. You can apply the straight line method for the machinery and the furniture and the cars. It's good to remember. The straight line method is you depreciate the same amount for each year. It's very simple. And the fixed percentage method is basically calculate that residual value multiplied by the depreciation rate. So if the useful life is 6 years, depreciation rate is 0.333. So how it's gonna works? If you purchase the 60 and the first year your depreciation will be 60 multiplied by 0.333, then you get the 19.9. That's the depreciation for the first year. And residual value will become 60 minus 19.9 because you depreciated and become 40.1. And second year depreciation will be 40.1 multiplied by 0.333 and become 13.3. That's the depreciation for the second year. You keep doing this one. And one thing I want to mention is different from the straight line method, depreciation amount will be decreasing as the time passes. So if you apply the fixed percentage method, you recognize more depreciation in the early stage and less depreciation in the later stage. And the useful life of the asset and depreciation rate is decided by law in Japan. For the new asset, this is for the new asset, but how about if you purchase the used asset? Useful life of the used asset will be calculated according to these formulas. So this, if your useful life, like as a new asset, it has not expired, this you calculate the useful life of the used asset according to these formulas. Let's say if you purchase the car and useful life of the car is 6 years, and it was originally purchased about 2 years ago, that means that the useful life of the car has not expired yet. In that case, you use these formulas. And on the other hand, if useful life as a new asset already expired, like useful life of the car is 6 years, but the car was originally purchased about 8 years ago by previous owners. In that case, useful life is calculated as a useful life for new asset multiplied by 20. Let me show you example of this one. Let's say you purchased a used car, and by previous owners that used car was purchased about 4 years ago, so it's already 4 years past. Then useful life of the other new asset is 6 years, and it purchased about 4 years ago, so you minus 4 years. plus 4 years already passed, so 4 years multiplied by 20, then useful life of this car become 2.8 years and rounded it down to the 2 years. So this is how you can save tax. As I said before, useful life, depreciation rate is decided according to the law. So if the useful life is 2 years, depreciation rate is 1. That means it's 100% depreciated. If useful life is 3 years, it's like 0.667. So in the example, useful life of the used car is calculated as 2 years. That means depreciation rate is 100%. So if you purchase the used car, by 2 million Japanese yen, the depreciation for the first year is 2 million Japanese yen multiplied by 100%, so it's still 2 million. So it has a very big impact on your taxable income. If you make a lot of the profit and if you want to save a tax, purchasing the used car or used asset can be a good choice. The important point is I want to mention total amount of the depreciation, possible depreciation is the same if you buy the new asset or purchase, new asset or used asset. But if you purchase the used asset, you can depreciate way faster than you purchase the new asset. So as I say before, tax planning is really important when you want to recognize the depreciation. It's all based on your tax planning. Thank you for listening today's lectures. See you next time. Thank you for watching sadywellj.com. My name is Sada. I'm a Japanese tax accountant and helping entrepreneurs in Japan. If you want to know more detail, call me now. See you next time.